Hello, traders. It's Monday, the 21st of September, 2020. It is 8 a.m. Chicago time here on a beautiful, bright day. This is episode number 1841. Thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off sentiment, solidly risk off. The bonds are up one handle and two ticks, with the U.S. dollar up 51 cents. Even the yen is up, the Bund is up 55 ticks, and the 10-year notes up 8.5 big ticks. And the laggard today is the German DAX. The German DAX taking a beating, down 463 points or 3.52%. The Euro Stoxx 50 down 109 points, 3.32%. Massive drag on the global index market out of Europe. A few things going on. There were some comments. By the way, the Russell's down 2.51% or 38.6 points. There's just a lot to be concerned about this morning. The German health minister said coronavirus infection dynamic in countries like France, Netherlands, and Austria is very worrying. The global equity market appears to be nervous as a result of virus fears combined with other factors. Fed's Powell set to speak before Congress on Tuesday through Thursday to discuss pandemic relief efforts. The fact is, there's no relief package coming. Equity markets Europe are suffering large losses as health concerns and lockdown fears are weighing on sentiment. Recently, the World Health Organization warned about a very serious situation in Europe with respect to the number of new COVID cases. Localized lockdowns have become more prevalent lately, and there has been an increasing chatter of a lockdown for London. The speculation is that there could be a reintroduction of a number of restrictions on the UK's capital city, but it is unlikely to be as severe as what was imposed in March. So that's what things are looking like. We had an impulse down overnight in the S&P, and we're still waiting on the continuation lower. I'll go over some of the structure there. There's a lot to cover. In terms of the calendar, just looking at the week, the main thing, it is a Fed parade this week. It's really a central bank parade this week, with ECB's Lagarde having started speaking about 15 minutes ago. 15 minutes ago, Fed's Brainard, Fed's Kaplan Williams come in at noon and 6 p.m. today. Tomorrow we get Fed's Chair Powell at 10:30 Eastern testifying before Congress. We do get existing home sales tomorrow, consumer confidence out of Europe, and API stock change. Wednesday, we got GfK consumer confidence out of Germany. We get market services and manufacturing PMI across the globe. Fed's Mester on Wednesday at 9. Fed's Chair again at 10. And Fed's Evans at 11. Fed's Quarles at 2. These are all on Wednesday. And the ECB non-monetary policy meeting begins. On Thursday, IFO business climate out of Germany. New home sales out of the U.S., initial claims out of the U.S., Mnuchin testifies before Congress at 10. Fed's Chair Powell also testifies before Congress at 10. And then Fed's Evans and Fed's Williams at 1 and 2 o'clock. And in the evening, Great Britain's GfK consumer confidence. And then Friday, durable goods in the U.S., Fed's Williams is speaking at 9 and 3:10. So you could see how stacked this thing is. Anyway, so that's where we stand. Let's shift gears here and look at something that I did not prepare for. Just 1 second as I bring up Friday's Trader Bite. Okay, here we go. Bada bing, bada boom. This is what was expected on Friday. Friday was looking for a dip down into 33.47, consolidation and a run up. Was looking for the high to be taken out, the high of 66 or so. That's the main scenario. Secondary is we push the high and then we fall back through and start moving towards 33.40 and consolidate there. Here's what happened on Friday. Friday kind of puked them out a little bit. Did not have any interest in taking out the high, so my scenarios on Friday were completely off. Just weak from the get-go. We push right into Friday's point of control. We push back out, and then from there it's just selling, and then it trips on itself, and then we come back to the open into the close. Look at the profile on Friday. Just terrible. I mean, that is a profile that only a mother could love. There's no consensus there in that profile. There's nothing redeeming to be said about Friday's profile. It does not represent value. It does not show consensus. It shows a lot of areas of consolidation or battle. And just overall, just an ugly quad witching type of action. Heavy volume, 1.98 million contracts, with the point of control at 33.37, and we are well below that. We're trading at 32.56, so we are essentially 100 points below where we were on Friday, where we opened on Friday. And so what it's telling me is just Friday just really had no process or methodology. It was simply just a very active push and consolidate and push and consolidate. We had some really big zippers that broke on Friday, and it's just there's not much I could say. So I was totally off on my expectations on Friday. I was looking for a sell-off on scenario 2, but I was looking for it to test the high to give us a look, see above the prior day's high to bring in sellers. That did not happen. It kind of opened, pushed up very, very small, and then it rolled over and it never looked back. Friday stayed well ahead of its VWAP and mid to the short side, and basically chugged its way up. This here is lethal to many people, as it looks like your shorts are going to hold, and it just continues to slowly grind up, spurring people to either retake the short because they think they got in too soon, or to add or to give more room to the short side, and it just grinds its way up. Friday's just a horrible way to end the week in the action that we had on that day. So that's where that is. Coming into yesterday or last night here in Chicago, the Sunday night open, we take an immediate dip and then we start to push higher. It looks like we're moving from the lower distribution into the upper distribution, and then it just peters out and rolls over, and then it really starts selling. The selling really starts right here. You can see that the delta bars, negative delta bars, just kick in right there with the delta accelerating down. Before that, delta was pretty much flat. And what we've done so far is we have been very methodical. We're holding the point of control near the lows. This is very likely to push lower. We are in the 32.50 area, but this is setting up for another leg down, in my opinion. It's consolidated here quite a bit. Built, remember this is 15-minute chart. We've built quite a zipper in this area, and we are not rising. We're not creating an excess. We are actually testing lower. So unless it turns around and takes out 3270, I'm expecting it to push lower, to take the low out this morning. So there's a lot of structures beneath us with the composite point of control, going back to the start of last year, right here at 3207, and that's the expected target if we continue to sell. It'll be this composite point of control with a limiting, with a boundary at 3233. Overall, 3216 is really big. 3216 is quite the magnet right here. And that's where I'm expecting us to rotate this week. It doesn't look like it is done. Doesn't look like it's done to the downside. It looks to me like it's not able to find buyers to start pushing it back up. So with an impulse coming in as it was, consolidation, we still don't have a retested or breached low in the overnight session of 47 and a quarter, so I expect at least a break there. So that's how things are shaping up there. Let's take a look at the bigger picture by looking at the composite. The composite the composite shows that we put in this excess high, put in this excess all-time high. We've come back, we've consolidated here in the middle. And what we did last week was to expand the weekly high from 34.14 to 34.19 and a half in the RTH session. Okay, so 34.14, 34.19 and a half. But then we expanded the low from 32.98 and a quarter to 32.87. So what we have is some sort of a megaphone kind of expanding test on both sides. What we have is an expanding low, an expanding high situation here with the market kind of staying below the point of control, the black line right here. The black line is at 3360.75 or 3361, call it for even numbers. It's just talking handles. We're staying beneath there, and we're currently trading right down here. To me, this looks like it is likely not done, and we are about to move into the prior profile, 3261.50. Looks like we're about to move into the prior composite right here, as outlined by this dashed rectangle, and that composite has a point of control of 3216.75, and that's why I was saying 3216.75 is likely to be a big test area, and that is a magnet now. So overall, stuck between 2 points of control. Looking bearish to me short term, and it looks like it is likely to move into the lower composite, which was built from the beginning of June through the end of July, and those are the prices we're coming back into. We've fallen below the 50 simple moving average on the RTH session, and overall it looks like conditions favor the short side again into 3216.75. So unless we push back up and squeeze through 3361, remember we're 3260, 100 points below that. It's looking like the short side has it. Okay, so we're opening in a gap this morning, and we're likely to test that out. Here's CT Bookmap.pro. We've been working with, ever since we made a low, we've been working with this triangle with these two data points. Then we went and basically tested here, poked through at the top, and then we really had a break to the downside, and it's testing that trend line from below right here, and it's really trying to squeeze back up. The overall delta is still negative, even though it is trying to push higher. The delta is really staying weak with the bulk of the volume right here where we are. Basically, the value area in the overnight session is in this area. So we made this move on the European Open, and for about 2 hours since the European Open, and we have not moved away from here. This tells me that whatever attempt it tries to make to the upside is likely to be confronted by selling, and that is the side I'm leaning on if the auction was to perform as it normally does. So let's take a look at what's expected for today. All right, so what are we looking for here this morning? Allez, allez. This morning, the expectation is for an open auction out of range. Again, we're opening in this thick area. And as I said, if we stay below this 3270, we're likely to test the downside. I'm expecting an open auction out of range. I'm expecting it to attempt to push to the upside. I'm expecting an impulse down back to the overnight point of control, and I'm looking for the 32.47 and a quarter to be pushed. And if it does, we are likely to squeeze down through to this 32.27 area. Is this big confluence area down below for a test consolidation and then probably a pop into the close. This is scenario one. And then the secondary is we open in an open auction that fails immediately, pushes the low, squeezes below the 47 and bounces right off this 42, 43 area, comes back into the range and consolidates in between, just hangs here for the day. Again, it is a Monday. We might see it just pushing to 42 and then squeezing to the other side, potentially to 68.70 right up here. This is the cutoff area, the 70, and then holding sideways. Because we're out of balance, we have a third scenario that's very likely to play out, and that is an open test down, unable, drive up to 70, consolidate, and then squeeze into the next area up, which is 3280, which brings us back to Friday's low from back here. 3280, attempts a little bit higher, and then comes back and finishes somewhere in the 70 area in this low volume node right here. These are the three key scenarios out of 6 that I was formulating for today. We'll see what it does, but those are the key elements that are in play here. To me, it just doesn't look like it's got a lot of strength, but who knows? Once it opens up, we'll see how it responds. The big picture again is we are stuck between a 33.61, 32, the 32.53, and then below us 32.16 and 32.08. These are big areas, and we are likely to consolidate here for some time. So overall, if we continue lower, we're looking at 32.16, 32.07, but I'm not seeing a good argument for the market turning back up and breaking above the key prices up above 33.61 and pushing higher is unlikely in the short term. So that's, if that's going to happen, it's going to be later in the week. But for now, we are likely accepting and stuck in this area here as I showed you on the composite. Okay, good luck, and I'll catch you tomorrow morning. Take care.